Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. We have our experts already waiting by patiently. Remember, viewers, you can write to us on the number flashing on your screen, and each time you write to us, do remember to mention your name, the stock that you're looking to invest in, mention that name as well. And if you've already invested in the stock, mention the buy price or quantity as well as the time horizon, and that way our experts will be able to help you better. And talking about our experts, we have Gaurang Shah who's joining us on the fundamentals, while on the technicals, we have Ruchit Jain right now with us. Once again, good morning, Gaurang and Ruchit. Thank you so much for joining us on ET Now. And let me take the first query that I have. And this one is coming in from Nagakumar, wants to know about ITDC tourism. He wants to know about this counter because he has 100 shares at a price of 750 rupees per share. He's saying he can hold on to for another year or so, Ruchit, but what should he do? Hold on to it or book loss and exit?
I would suggest booking loss at current price levels. No, the short-term trend seems to be a bit corrective phase, but what we have seen that the correction since the month of July, we have not seen any high volume-based sell-off in the stock. So I think the stock would manage to find a support base somewhere in the range of 620 to 650, from where we could see again a pullback move towards that 740, 750 mark. So hold on to current levels. And no, since its time frame is for 1 year, I think these are not the prices where one should look for booking losses.
So that's the take coming in on ITDC, but I'm going to come to you, Gaurang, because we have Chandrasekhar who's writing to us from Hyderabad and he's asking about State Bank or Canara Bank. He's wondering which one is the better choice. So what is the answer that you have for him then?
I'm sorry, I couldn't hear. Which are the banks? Can you please repeat again?
India as well as Canara Bank, and he's wondering which one is the better choice.
So Canara Bank, we have a fundamental coverage, and SBI also, we do have a coverage on the fundamental side. Now, if I have to pick from either of them, if my capacity is limited in terms of investment idea, then given the correction that we've seen in State Bank of India post the sell side reports that we saw about week 10 days back, I think somewhere close to about 790 current levels, downside looks to be protected. And in terms of long term, I think we have a target somewhere close to about 900 plus levels. Earnings are due second quarter very soon. If the earnings are going to be better than what our estimates are, then these targets would get revised. So if I have to pick from either of them, in fact, we have a coverage like I mentioned, but State Bank of India would be the first preference.
Thanks, Gaurang. I'll come back to you then because you have Achar who's written to us from Madurai, wants to know about Federal Bank and Karnataka Bank. Out of these two, which one do you think will be the next IndusInd Bank is what he's asking.
So, Cheryl, this is a difficult one, honestly. We used to have coverage on Federal Bank. Our targets were somewhere close to about 190 to 200. Those targets are in place. So we have a book profit recommendation on Federal Bank of India, on Federal Bank, I beg your pardon. On Karnataka Bank, again, no specific coverage because we don't have a coverage over here. We used to cover it some time back. But given you mentioned about the next IndusInd Bank. So I would say that go and invest in IndusInd Bank. I think we, at current levels, the upside is very much there.
Oops. I think we've snapped that line with Gaurang. We'll try and fix it back and then we will actually get his views. Gaurang, if you're back, then request you to complete what we were saying.
Sorry, there was an interruption on the Wi-Fi. So I would say that go and invest into IndusInd Bank. Federal Bank, like I mentioned, we have a book profit recommendation, sell recommendation, and risk reward is extremely favorable in IndusInd Bank. 1800 plus is the target. So I would say that IndusInd Bank would be a better choice.
Gaurang, I'm going to come back to you because we have Raman who's writing to us from Chennai as well, and he's asking if Poonawalla Fincorp as well as India Glycols at current prices are a good bet from a 1 to 2 year outlook. So that is the time frame that he has in mind. What do you have for him then?
So on India Glycol and Poonawalla Fincorp, unfortunately, we don't have a coverage, but the news flow is very, very strong for India Glycol in terms of the opportunities that lie and in terms of the performance on quarter-on-quarter, half-yearly and yearly basis. So I would say that this is a very strong company from a long-term point of view, and earnings visibility is absolutely very, very strong. And if the earnings have to improve, then I think the level is going to be a much higher. No specific recommendation since we don't have a coverage, but it's a great company with strong balance sheet and great business outlook.
All right, Ruchit, let me come to you. On the surface, this query looks very easy and looks like it is, it's a no-brainer sort of a query, but actually it's a very tough query coming in from Vivek. He wants to know between FMCG, IT and private banks, which one should he pick? And his options for the FMCG space is HUL, the private banks is HDFC Bank, and in the tech space is TCS. So he wants to know out of these three counters, which one should he look to invest in for a period of 1 to 2 years at current price, a lump sum investment?
So all the three heavyweights are there, and if I look at the chart structure, then from a mid to long term perspective, I think the chart structures are positive for all of them. So I would suggest that rather than picking any one or two of them, you can divide your money in all three and invest in all three of them.
All right, thanks Ruchit for that take coming in for that very complex query. But I'm going to come back to you, Gaurang, because we do have an investor named Venu writing to us from Chennai, and he's wondering about the 100 shares of Escorts Kubota that he bought at a price of 4,300, 100 shares of Deepak Nitrite also that he's holding at a price of 3,010. Now he's seen a tad bit of a correction coming in, and he's wondering what he should do with his bets then.
So on Escorts Kubota, earlier we had a buy recommendation. Our targets were somewhere close to about 3,800 to 4,000. The stock has actually overshot our targets, currently trading at 4,200. So we have given a book profit or sell recommendation on Escorts Kubota. If you want to make a switch from here and look at the auto pack, then our sense is that Mahindra and Mahindra and Eicher Motors, these could be better alternatives from a longer term perspective. Deepak Nitrite, a company which is showing great performance in terms of earning visibility, and the entire specialty chemicals, agrochemicals sector, if you ask me, has been an underperformer. But I think with China plus one, Europe plus one policy, and of course, most of these companies have actually given great investment into capex, and they've invested into R&D in terms of launching new products. So the future looks extremely strong for Deepak Nitrite. Unfortunately, we don't have a coverage, so I won't give a buy, sell, and hold to it.
Right. This one is coming to you now, Ruchit, from Veni, writing to us from Hyderabad. The senior citizen has PNB Housing, 560 shares at an elevated price of around 1,120 rupees per share. In heavy loss, what should our viewers do? Look to hold or average it out?
I would recommend holding at current levels. No need to sell in loss because the price volume action from a midterm perspective is still bullish. Recently, the stock price had rallied from 750 to 1200 in a very short span of time, due to which the momentum readings were overbought, and these are getting cooled off. In case if you get further dips towards that 900 kind of levels, I think that's where the major support would come in. 900, 880 technically is a mid to long term support zone. So hold on current levels, no need to do anything else. And if you get any such dip toward that major support, then that would be good levels to buy more and average out.
That's about PNB Housing, but Ruchit, I'm going to come back to you because we also have Rajiv who's writing to us from Mumbai itself, and he's talking to us about L&T Finance, and he has 800 shares of L&T Finance. He's wondering what should he do in terms of a short to medium outlook, and what kind of targets also that he can expect for the next 6 months then.
So initial, if you look at next 6 months, then you can expect targets around 215 to 220. That's where the technical resistance as per the retracements would come in. And the stock has good support base formed around 170 to 165, where the recent swing lows are there. So you expect some long consolidation in the stock, but any declines towards 165, 170 would be good opportunity to add more positions and hold on to your existing positions from a 6 months perspective for potential targets around 220.
All right, coming to you actually, Gaurang, for the next query coming in from Sanjeev Sinha, who's writing to us from Lucknow, and he has given a list of 4 stocks, but out of those 4 stocks, he wants to know which one should he look to invest right now in for the longer term. One is CDSL, the other one is Astral Limited, Pidilite and GMM Pfaudler.
So Astral and my sense is a good company from a long-term point of view. Have a coverage over here. CDSL, again, if you believe the India growth story along with the stock market performance, then all those entities which are associated with stock market, now whether they are going to be platform providers, a company like BSC, or a service provider, a company like CDSL, or intermediaries, I think all these are going to be performing well if the stock market is going to do well. Not to forget, number of depository accounts that have opened have gone up considerably over the last couple of months, especially the post-COVID era. So my sense is that CDSL is a strong company in terms of performance and business outlook. Astral Limited, again, a very promising company in terms of opportunity that lies ahead. So on the fundamental side, the only recommendation on the buy side that I can give is Astral Limited. But CDSL also keeping in mind the opportunity in terms of growth. This is also a very strong company.
Alright, so Ruchit, I'm going to come back to you because we have Pratiksha who's writing to us all the way from Oman, and she's asking about GNFC as well as SRF. Now, her buy price for GNFC is 717 rupees, and when it comes to SRF, it's 2,382. Now, she can hold on for 3 more months, but she's wondering if she should average or sell at this point.
I'll come to JNFC first. Not recommended to average, but hold on for your existing position. The stock is into a consolidation phase where the higher end of the consolidation is around 720, just a bit above the buy price. So I think hold for those levels in case if the stock comes over there, then take a review again there. SRF also said there will be similar recommendation. The stock is into a consolidation phase from 2300 to 2650, the range that we have seen almost in last 3 to 4 months. So let the stock come towards the higher end of the range of 2600, 2650. There you can take a review again, and depending upon the price volume action over there, you can take the decision whether to exit or hold on.
All right, this one is coming from Anand Mahishi. He's writing to us from Bangalore. Very interesting, actually, query coming in, Gaurang. He has about 20 shares of LIC at a price of 825 rupees per share. He's saying there is not much growth, so should he look to shift to Trent or Keynes Technologies? I believe in the terms of growth, he means the stock price return is what I believe is what he means over here when you talk about growth. But what's your take? Do you think keeping that in mind, the strategy is good, or LIC is a formidable player in its space? Everybody knows about it.
I think LIC, and along with that, other life insurance companies, likes of SBI Life, HDFC Life, and ICICI Pru. On the fundamental side, as a disclosure, we have coverage on all these 4 names. LIC is the largest player in the insurance sector. We all know the history. After the IPO, it got listed, and post listing for a long period of time, the share was trading below the IPO price. Things have started to turn around in terms of premiums, new premium run rate going up, Cheryl. And my sense is that post the COVID, a lot of individuals who were not taking term insurance have started to take term insurance, and along with that, they have taken a higher sum assured. And by the virtue of that higher sum assured, you are going to pay higher premium for that higher sum assured. That translates into earnings visibility and revenues for the life insurance companies. So, I mean, don't get disheartened. I think things have started to change for better in terms of earning visibility for life insurance company. Likewise for LIC. So I would say that since you invested and your investment level is 800, which is very, very, comfortable zone in terms of risk reward ratio also. Somewhere close to about 1200 plus should be the target on the long-term basis approximately for LIC.
That's Gaurang's view coming in when it comes to the insurance pack. As we slip into a short break, let's... Welcome back. Thank you so much for staying tuned in. Well, let's continue taking your stock-related queries then. And we have Foram M.Chheda joining us on the technical side, who's the founder of ChartAnalytics. Foram, I'm going to come to you first because we do have Ramesh who's writing to us from Bangalore. And he has 950 shares of Zydus Life Sciences purchased at a price of 1,136. Can he continue to hold on, or should he exit at this point?
Well, hi, good morning, and thank you for having me. Well, to begin with, on Zydus, I would say continue to hold on for now and can maintain a strict stop loss below the levels of 1030. Because right now the stock price is showing some kind of a stability from the past few trading sessions. So he can continue to hold on, but just a very strict stop loss is required. And at the same time, once the stock stabilizes and we see a rebound, the stock price is likely to move back to the levels of 1200. Probably at that point of time, we may see some kind of more consolidation and then a bit of an upside momentum. But currently, it's a hold.
All right, coming back to you, Forum, good morning. This one is coming from Kiran Krishnamurthy, writing to us from Australia. He wants to know whether there's a good strategy to go ahead and buy BEL as well as Canara Bank because of the rejig that you are going to see in the nifty set of indices. What's your take coming in? Do you think it's a good strategy based on that to go ahead and buy these counters at current price today?
Good morning. So with BEL, I would say that one can wait to buy. Look for levels of closer to 275. We had seen a very good increase in volume as on Friday. However, I would yet just suggest that one can wait for a lower level of around 270 to 275 to buy this particular stock, but a good investment stock. And another one is Canara Bank. So in Canara Bank also something very similar. It's facing right now technically a resistance near the 100-day moving average as well as a 250. So I would suggest that look for lower levels. There is no rush to buy, but look for around 105 to around 107 levels to get into the stock. But as investments, they're good stocks to be in.
All right then, Forum. But I'm going to come back to you, Gaurang, because we have Sudha who's also writing to us about latent view analytics, and she has an entry price of 554 rupees. What do you have in mind when it comes to latent view analytics then?
Well, so during the IPO, we had a coverage on this one from a long-term point of view. And if I have to make that IPO note a base of the recommendation, then I think if you invested it from a long-term point of view, stay invested, first of all. Secondly, the business that they are into, there is no, according as far as my information is there is no listed entity to do a peer comparison. But looks to be a promising company, has been consolidating in the zone of 450 to 500 for some time. But I think earnings should drive the share prices upward. So if you invested from a long-term point of view, stay invested.
All right, this one is coming in from Bhagwan. He's writing to us from Mumbai. He wants to know about Incon International that he's purchased at a price of around 274 and ONGC which he's purchased at a price of 331 rupees per share. He wants to know about both of these counters. How do they look to you actually fundamentally, Gaurang? And should he actually also look at Piramal Pharma right now?
Pharma sector has been buzzing. Piramal Pharma is a strong company. I think there was some news flow also about week 10 days back. Stock has managed to cross over 200 currently at to about 222. In terms of commentary of the business, I think last week again, I was listening into the commentary from the management in terms of business outlook and opportunity. So it looks to be a very strong player, rather a small cap player in the pharma universe. No specific coverage, but it looks to be a pretty strong performance on the capabilities and capacities in terms of earning visibility. For ONGC, 330 is the target, Cheryl, from a long-term point of view. Stay invested. I think lots have changed for the exploration sector under the NELP policy, which is the exploration policy. And in terms of natural resources, both onshore, offshore, as well as ultra deep waters. And opportunity is definitely there. So stay invested in ONGC. As far as I think it was the third stock was Ircon. So our sense on the sector, basically, that is the sector which is dependent on Indian Railways. The growth story, order book, and earning visibility is going to stay for another 3 to 5 years. So if you invested in relative company, whether it is public or private, and if it's a strong performer, then you need to have at least 2.5, 3 year plus kind of time horizon to get a meaningful return from your investment.
Thanks, Gaurang, for that view coming in. But I'm going to come back to you, Forum, because we do have S. Manjunath who's writing to us from Bangalore, and they're holding 20 shares of BEML at an average price of 4,946. 25% loss is what they're currently looking at now. They're wondering if they should be shifting to another stock for the next 4 to 5 months. So what do you have in mind?
Well, I would suggest to hold on to it. Now, the reason being is that since last 1 month or a little more than a month, the stock has now stabilized near these levels, current levels of 3,600. It has been trying to take support on a very important moving average of 200, which is we consider like an underlying trend, the long-term trend. So since it is taking support at these levels, can continue to hold on for the next 4 to 5 months as far as these levels sustain. So a strict stop loss is required to be below the levels of around 3,570. And at the same time, you can expect the continuation of a consolidation as from an intermediate perspective. But as an investment, it is at a very good level if somebody wants to look at even investing because the risk reward is very much favorable. But as far as this query is concerned, it's a hold for now.
All right, this one is coming in from Akhil from Delhi. He wants to know about some counters for investment purpose, Gaurav. Adani Ports, he has about 650 shares at a price of 700 and JSW Infra, 120 shares at a price of around 119 rupees per share. Which is a better option when you talk about the earnings growth as well as the prospects for a better return for the long term amongst these two?
Again, JSW Infra, Cheryl, we had a IPO note. This was, I think, about last year. The company hit the street with the IPO. business opportunity gallows for this one, and we had a subscribed recommendation from a long-term point of view on JSW Infra. Both companies are into port logistics and container handling. Volumes are likely to go up for both the companies. In terms of presence, Adani Port is a larger player in terms of its presence and volume handling capacity. JSW Infra has started its inroads in on Indian subcontinent as far as port points are concerned, touch points are concerned. It also operates a large port in Middle East, if I'm not mistaken, near Dubai. Uh, has a large infrastructure over there also. So I'm not saying that Adani Port is not a good company. It's a good company, of course, by default with the kind of operations that they have. But if I have to look at growth prospects, then JSW Infra, keeping in mind the IPO note, I think this is a promising company.
Alright, so JSW Infra looks promising too, Gaurang, but I'm going to come right back to you, Gaurang, because we do have Dhanlakshmi who's also writing to us from Bengaluru. Wants a recommendation on L&T, has 100 shares at a buy price of 3,207. So what do you have in mind when it comes to L&T then?
Well, I think this is one company, honestly, which has been constantly on our buy recommendation on the fundamental side. And time and again, we have revised our target price upwards. Currently, if you ask me, the target price that we have set aside on the fundamental side, long term, is about 4,400. Diversified company, it's been 8 decades that this company has been operating in India. One of the best investor friendly companies, if you ask me, in terms of bonus as well as dividends are concerned. In terms of operation, diversified vertical contributing to the balance sheet from all the four sides. Hydrocarbon, defense, complex engineering, infrastructure, you name it, and they have it. So it's a great company. And if somebody wants to do a SIP also in a stock like L&T, for example, buy few quantities every month with a 3 to 5 year kind of a time horizon, I think this one's going to be a great wealth creator.
Coming right back to you, and also sorry for mispronunciation of your name earlier on by Mr. Call you Gaurav, but yeah, Gaurang, coming to you. Siddharth has written to us. He's writing to us from Bangalore. Fundamentally, wants to know now is the right time to go ahead and enter IIFL Finance. This after the positive outlook coming in, or the positive news flow coming in with regards to that RBI ban being lifted. So, do you think it makes sense for him to go ahead and buy this one right now?
Well, honestly, I won't give a specific recommendation over here, Cheryl, because we don't have a coverage on IIFL. But let me say this. I think whether it is this company or any other company, if there are issues and the issues are getting sorted out and the business opportunity definitely opens up, starts contributing to the balance sheet. And like I said, for example, we had a query on CDSL. So if you are optimistic about the India growth story, if you are optimistic about the growth story as far as the Indian stock market is concerned, then all those entities which are associated with the stock market, whether it is a platform provider, service provider, or an intermediary, all of them are likely to do well. I won't give a specific coverage since we don't have a coverage on the fundamental side on IIFL.
I'm going to have to come back to you, Gaurang, because we do have Satish Kumar who's writing to us from Bengaluru, and he's asking about Rashtriya Chemicals and Fertilizers, buy price of 220 rupees and 2,000 shares is what he's holding. He's wondering what the future has in store for that particular counter.
So I think the entire fertilizer and urea is going to be a great beneficiary in terms of the government policy as far as the agri sector is concerned. Government is also providing our farmers with technology and knowledge of how to use fertilizer and urea in what quantity and what quality. There has been constant improvement in terms of consumption of fertilizer and urea, given the kind of agri activity that we have in our Indian subcontinent. There are two names in this particular pack on which we are positive. One is Chambal Fertilizer and another one is Coromandel. RCF is rather a slow mover in this particular category. So if I had an opportunity, I would possibly move into Coromandel and Chambal Fertilizer from a long-term point of view. RCF may be a kind of a performer, but lags in terms of earning visibility and stock price movement.
Give you a break then, Gaurav and Gaurang, I beg your pardon, sorry, Gaurang. And before we hit the break, let me go to Forum with this query coming in from Alex, who's writing to us from Pune. 10 shares of Prince Pipes at the price of around 684 rupees per share. Can our viewer expect some profit in the next 3 months, Forum?
Well, from the 3-month perspective, I don't think so. It's going to be a lot of good bullishness in the stock. The stock is just stable. But overall, if I look at it on a daily chart or on a weekly chart, the stock trend remains weak. So I would consider that if the stock price has to move or rebound towards the levels of 600 to 610, should consider to switch, because overall I see a lack of momentum in this stock.
There you have it. That is what Forum thinks about Prince Pipes. But time for a very quick breather on the show. When we come back, we'll continue taking all of your stock-related queries. So do stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related query. And this next query is coming for you, Forum, from Gautam from Mumbai. He has 4,000 shares of Power Grid. He wants to know, is it in a break-even position right now? Should he look to hold or look to exit this one? He's not given his buy price.
Okay. And any time horizon also has been mentioned?
It's just a way, it's one sentence query that he's asked me about Power Grid. 4,000 shares, which is in break-even position now. Should I hold or sell?
Okay, so overall, if you talk about Power Grid, the trend is good. Currently, the stock is facing some resistance near 360 levels. However, if he can hold on for say around 3 to 4 months, he can see some good potential upside return also. I'm expecting an upside target of closer to around 380. So I would suggest it's a hold. However, since it's at a break-even point, I would suggest that he can maintain a strict stop loss, because the stop loss is much at a lower level, closer to around 338. So from that aspect, if he can figure out the risk appetite, that would be great. But overall, the stock is good and should continue to hold on to it.
All right, Forum, I'm going to come back to you because we do have Mekha, who lives in the UAE, a regular viewer of the show, who's writing to us about Titagarh Rail, average price of 1,515, that she's holding 39 shares with. Good time to average?
Yes, good time to average. The stock price is very, very close to the important moving average of 200. And as I rightly said before that also, that it's a very important moving average on technical grounds. So it's a good level, safe level to average the stock. However, for this additional shares that she would be adding in, I would suggest that maintain a very strict stop loss, but the levels will be closer to 1,125. But from an investment perspective, good levels to average, and then she can see some kind of a slowly and a gradual up move in the stock.
All right, this next query is coming in from Najib, writing to us from Qatar. He wants to know about Cochin Shipyard. 1,000 shares at a price of 440 rupees per share. Is down almost 40% from the July highs. Gaurang, what should he do now? He wants to know whether it's advisable to go ahead and accumulate some more of the counters, wait for some more time. What's the strategy here?
This was the IPO floor, Cheryl, if I'm not mistaken, for Cochin Shipyard a couple of years back. We had given a subscribe recommendation during the IPO. Post that, we had a standalone report on the fundamental side in terms of long-term investment idea, Cochin Shipyard. Currently, we have put our coverage on the buy side under review. So, I won't give a specific comment, but just let me give you certain insight about this particular company. Large contributor to the Indian Navy in terms of floating vessels as well as submarines, along with, of course, warships, mid-size and, of course, large-size capacities. Has got one of the largest dry dock facility for ship repairs down south in Cochin, and has been on the order side positive as far as the inflow of orders, not only from the Indian Navy, but also from other companies domestically as well as overseas. So, and you bought it at 440. Currently, the stock is at about 1680 or 1700. So what if the prices have come down, Cheryl? I think the rally over the last 1-2 years in the defense stock has been to the extent of 100%, 200%, or even 300%. So some kind of consolidation profit booking immediately from a short to medium term should not deter long-term investors. I won't give a specific comment over here since the coverage is under review, but it is one of the strongest players in terms of capabilities and capacities.
And don't get deterred by short-term moves is the kind of view coming in from Gaurang there. But I'm going to come to you, Forum, because we do have Chandrasekharan who's writing to us from Chennai asking about MTAR Technology, 50 shares at a buy price of 2,640. Should he average at current level or wait for a further correction then?
Well, we have seen the overall stock, one is that remains quite volatile. So I would suggest that the overall trend is weak and it's trading below multiple moving averages. Even if you have to check some indicators like RSI or even parabolic SAR, all are showing signs of a sell. So I would suggest it's better to switch from the stock and not continue to hold on to it.
All right, so that's the take coming in on MTAR Tech. But thank you so much, Foram, Gaurang, as well as Ruchit for joining us on the show and resolving all of our stock-related queries. We've been able to take at least 30 queries on this edition of Buy Now, Sell Now. But with that, it's a goodbye from Shreyansi, myself, and the team that put the show together. Stay tuned. I'll be back with Markets at Noon with Srishti.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.